Hello guys, good morning. This is Travis Kiefer here. Today I'm going to show you exactly how I have made so much money and have been so successful in the futures market over the past few years. Okay, I'm going to try to make this. This is my first video ever posted to YouTube. I don't know if it'll be my last. Hopefully not. I don't have that much time. I have a website. That link's in the description after the video. If you're interested in learning some more, go ahead and click on that or subscribe. If I get subscribers based on this video, I'll probably go ahead and continue with this channel. This channel was created for this video though. This channel was created because I wanted to give a video and I wanted to give as much information as I can within that video because I just don't have a lot of time as of right now to go ahead and baby a YouTube channel. So, I don't know if I can be on here 3-4 times a week. I just don't know. Because of the website, that website has members. I have to look out for them. So, a few times, so they deal with me weekly. I'm on there weekly. I'm giving them advice, showing them what I'm doing, what I'm about to do, what they should do. So that's how I treat, the website. As far as the YouTube channel, I never really thought about it. My members kind of talked me into just coming on here and starting a channel. So that's what I'm doing. But just in case I don't have a lot of time to post a ton of videos, I want to make this video, as informational as possible for you. To where if you're someone out there watching right now, depending on what you were just looking up and you found me, I hope this might change your life like the way that it changed me when I first discovered it. So I didn't even discover futures until about 3 years ago. Okay, I've heard of it, but I'd never known anything about it at all. My girlfriend's grandpa told me about it. So I went ahead and I started doing research, and it was powerful stuff, guys. As soon as I learned about it, I knew this was it. I knew how to do it. Okay, so I'm thinking, oh, this is so powerful. How doesn't everybody have? How isn't everybody in this? How isn't everybody having money from this? How haven't they heard of this? And just the fact is, well, from what I looked up, most people just lose all their money in this, okay? Or lose all someone else's money in this. And that's unfortunate because it's really not that hard. They just do it wrong. And most of the reason why they do it wrong is because you have a bunch of people, whether that's online or in person, that they tell you that get their program, get their system, get their software, and, it'll do all the work for you. And it'll know where the market's going to go. And guys, that's the biggest load of crap you'll ever hear in your life. There's nothing like that, okay? Guys, algorithms can't beat me, dude. All right? If Google creates an algorithm tomorrow, I'm going to beat the hell out of it in the market every time. They can't beat me, dude. Nobody that went to Stanford that creates an algorithm can beat me. I've made $11 million over 3 years, and I didn't start until 3 years ago. My first trade, I made $80,000 in 1 week. Okay? Because I know how to do this. But the thing is, the reason why it can't be done with an algorithm is because I know what you need to know in order to do trades like I do. And it's very fluid. This stuff changes all the time. So it's not a set thing. You have to do this every day. You have to read up on stuff every day. And that's how it is. But guys, I used to work on gas wells where I went to work every day and I wrenched pipe for 16 to 20 hours a day. Wrenching pipe, helping them weld pipe, carrying pipe, hammering with the sledgehammer, unions on pipe, putting on industrial size heavy valves. And guys, that was work, and I had no life, and I only made about $1,000 a week. Okay? My first trade, I made $80,000 in a week on here. So there's really nothing else like this. All I got to do is read. That's it. I'll take that any day over anything else you give me. I can go to the beach and read. Guys, I do this from my phone. Okay, so I started this channel to release this video because when I first got started, see, I lived in Pittsburgh, Pennsylvania. I moved down to Tampa, Florida. All right, I hate the snow. I've always hated the cold weather. I just have. Okay, I wasn't able to move before. I was immobile, right? I was immobile because I couldn't find anything that could suit me that allowed me to grow as much as I wanted to grow. All right, you work at a day job, guys. You can't grow as much as you want to grow. You're contained. And that containment keeps you trapped. I'm not trapped, all right? My first trade after that week, I moved to Tampa. That was it. I didn't even pack anything. I bought everything new down here. That's what I want for everybody. And this is doable. This is possible. People do this, guys. And the way that I trade is how Wall Street trades. I just don't trade like everyone else. I don't look at charts. What you're not going to do in this video is you're not going to look at a single chart. The only time I even see a chart is when I'm about to hop into a trade, click buy or sell. Okay, and what I mean by buy or sell is, if I want to click sell in the futures market, that means I'm shorting the market, which means I believe the market's going to go down. If it goes down after I click sell, I'm making money while the market's going down. If I click buy, I'm going long the market, which means I believe the market's going to go up. As it goes up, I make money if I click that buy button. Now, you don't have to actually own anything to sell at all. You're just taking a short position. So I could just go in there without any positions right now and click sell. And if the market goes down, I'm making money. It really is that easy. Sometimes it's hard to believe, but it really is just this easy, guys. Okay? Unfortunately, it's the rest of the steps that gets people. What they just get trapped and they don't know. And there's too much junk out there, too much noise and bad information from people trying to sell you something or do all this. And guys, none of that junk works. What I'm going to show you today is what really works. It's what's worked for decades. It's never stopped working. And it's not that complicated. Do not get intimidated by this. This isn't hard, guys. I didn't know any of this stuff 3 years ago. Okay? Now I make millions like on a single trade. I mean, it's crazy. Okay, but I don't day trade either. I don't make millions of dollars by day trading for 10 minutes, then hopping into another trade and another trade. No, I trade oil and gold, and when I get into a trade, I'm going to stay in it for hours, days, months. And I don't mean months like 6. I mean like maybe a month and a half at most usually. I want to know what the market's going to do in 2 weeks. I want to know where the market's going to be in a month and a half. Okay? Charts show me what the market was yesterday and a month ago and last year. I don't care where the market was then. Current events change. Life changes. Economics changes. Policies changes. So fiscal policies always change. New regulations are passed every day. I don't care what happened last month. I care about what's going to happen next month because that's why this is called the futures market. And guys, so many people, let that slip past them. They just don't, I don't know what it is. They just don't. It doesn't click with them. Guys, it's the futures market. Charts show you the past, which means they're irrelevant. You got to know what the market's going to be in 2 weeks. And the only way to know that is to know the information that drives these markets, to know what actually makes these markets go up or down. Okay? So that's what I'm going to show you today. I'm going to show you how to really make a killing in futures. Okay, so don't be intimidated by this. It's easy. I'm going to show you specifically what I look at. All my members look at. Okay, like I said, I have that website. They know all this. The members on there know all this, and I get on there weekly and I show them what I'm waiting on, what I'm going to do, when I'm going to hop into a trade. So it benefits everybody. They can piggyback off me. Okay, that's what this is about. So that's what I'm going to do with you guys right now. You're not members, but I want to help people. I need people. I want people to do this, man. When I got to move from Pittsburgh to Tampa, greatest feeling in the world. I'm down here every day making money from my phone, guys. It's the greatest feeling in the world. I help people out. Hopefully maybe one day after this, you'll be able to help people out as well. Pay it forward. Pay this information forward. Hopefully this video reaches everybody, but highly doubtful. So with that being said, we're going to hop right into it. The first place we're going to go is we're going to go to BEA.gov. That's the Bureau of Economic Analysis.gov. And what I look for on this particular site right here is I look for the GDP. Okay, so I look for the current GDP. That could be quarterly, that could be annually. Okay, it depends on how far back you're looking. I look at both. If you want to look at the annual GDP, go back and compare that for 5 years, for 3 years. Is the economy growing? Okay, same thing with quarterly. Okay, I want you to remember with everything that I show you in this video, every key piece of data that I look at, you have to understand, like right here it says plus 2.1%. Okay, Q4 GDP for the United States. Okay, the problem with that is I don't know what that means. Does that mean that we are growing or declining? What was our GDP in the third quarter? Understand? So you have to compare every number. Every number you see, you must compare. Okay? You can't just look at what the GDP was in Q4 without knowing what it was in Q3 or Q2. So you want to go back at least a year quarterly, and you want to look at what the quarters were this year as far as GDP growth. If it's consistent growth, The two markets that I only trade in and my members only trade in are oil and gold. The reason why? They're highly liquid markets. Okay? What I mean by that is there's just a ton of money in them. All right? You can get in and out of a trade whenever you want instantly. I mean, it's like that. Whether that's from your phone or whether that's from, on your computer with whatever system you're using to trade. Okay? I happen to use TD Ameritrade. They have a trader app too. I don't know. I've always used it and it's always worked for me. And because I'm not a day trader, I don't really care about fees or anything like that. So, that's what I use and it works for me. Now, whatever it is you're using, you must go back and look at and compare these numbers to understand, are we growing or are we not? But I only trade in oil and gold. Those are liquid markets. It doesn't take that much information to know where those markets are going to head. All right. So, what you need is for oil and for gold is you need to know basic economic fundamentals. What is going on in the market right now? Okay. What I don't care about is what a politician says the market's doing right now. Remember that. Guys, I could care less of what any politician says to you on TV. I could care less. I ignore it. They don't mean nothing to me. This means everything to me. Okay? Because this is numbers. This is math. This is fact. Okay? People on TV, whether they're someone on some talk show or whether they're, a politician, they're telling you some kind of twisted version of the truth. But the numbers are the truth. So you got to go directly to the source. You don't say, oh, the economy's great. Everyone's saying it. Dude, who's everyone? I don't care. Does the numbers say it? Did you look at BEA.gov? What is the GDP growth going back to last year quarterly? Okay, you need to know that. And the reason why that's important for oil is because that means whenever the market's doing good, there's more demand for oil. And when there's more demand for oil, the supplies get eaten up. Supply demand. So when there's more demand, the price of oil goes up because that's eating into supplies. So I'm going to go long oil. I'm going to buy. I'm going to click that buy button. You understand? If I believe that this is going to continue up until next quarter. So if I believe that this growth is something that looks like it's going to continue until next quarter, then obviously oil has a high likelihood of climbing next quarter. Which means if I'm in it for 3 months, which I usually don't stand at 3 months, but let's say I did, you're making a killing, guys. A complete, absolute killing. Okay, and that's just with GDP. Okay, so this is where I go to look at GDP, and that's why. Now, as far as gold goes, it's the opposite. All right, as the market does good, gold goes down. And the reason why most of gold's demand, usually when you see spikes in gold, it's caused by some kind of bad news in the markets or in the world. All right, the markets don't like bad news, and many investors still look at gold as a safe haven investment. Okay, so what I mean by that is when they believe that something's not looking good for the economy, they want to buy gold. And a lot of these people buy physical gold. We're not buying anything physical. We're not buying physical oil or physical gold. We're speculating on what they're going to buy. That's it. I'm speculating on what they're going to buy. You have to know what Wall Street investors are thinking. You have to know what people that have billions and billions of dollars in their funds, you have to know what they're thinking. Because when they make a move, that's a huge move and it drives the markets. A day trader at home in his bedroom, dude, on a computer, taking out a trade, that don't drive the markets. I could care less what that guy's thinking. And he's probably wrong anyway. Even if they're wrong, don't care if they're wrong. You just have to know what they're thinking. So you have to get into the minds of Wall Street investors, big investment fund managers. Because when they make a move, the markets move. And so if you can ride that wave, you make a lot of money. Okay, but in gold, as soon as they get any little piece of bad news about the economy or something goes on in the world geopolitically, like war or something like that, or some kind of hostility in some area where it has a big impact on the economy, such as the Middle East, where such a huge percentage of the world's oil, demand every day comes from, that's where it's produced, and it comes through little choke points in water and, between countries, it has these choke points like Saudi Arabia. Okay. These choke points are important. If that gets blocked off, that means there's going to be more demand than supply. Okay. And who knows for how long? That's what you call uncertainty. So the price spikes. Okay. Why does the price spike? Because the investors on Wall Street say, whoa, this isn't good. I'm scared. Price of oil is going to spike. Gold's going to go up as well. because they're buying into gold at the same time oil's spiking. And when oil also spikes, the economy, that isn't good for the economy. That isn't good for the stock market as a whole, because that's a higher cost of energy from businesses. So if oil goes up and the whole economy runs on oil, that limits the profit margins of the economy and of our businesses, okay? So all this matters. But I look at GDP first, okay? Excuse me. The next thing I look at is called the Consumer Price Index, okay? BLS.gov. That's the Bureau of Labor Statistics.gov, okay? This CPI index measures inflation, okay? Now you got to have some inflation, okay? If you're growing, you're going to have some inflation. Some inflation is believed to be healthy, okay? We've never had a problem with it before. It's always something that's healthy. So, as demand for products rises on a whole economy, type of basis. So as the U.S. economy is growing and either people's incomes are rising or there's more jobs for, most people, then, that's going to cause more demand for the products in that economy. And that's going to cause those prices to rise because of demand. There's probably going to be a little more demand than supply. So prices rise. Okay, the whole job of the Federal Reserve is they have a mandate, okay, by law to basically cap inflation at 2% if they can annually. Okay, you don't want to go more than that. All right, if you go more than that, you're going to have serious problems in the economy, guys. It's not going to be good. Okay, especially you see what happened in Venezuela. If you don't know about that, hyperinflation, they just collapsed. 4 million people evacuated. There's nothing there. They can't even get their oil out of the ground. So this is a big deal. Okay. So what you want as a developed economy is you want to lower inflation. And you want about 2% a year. You want about 2% GDP a year as well. China has 6% growth or more a year. All right. Same with India. All right. And the difference is, guys, those economies are able to have that. They're able to sustain that level of growth because they're still developing. They're trying to switch from one type of industry running their economy to another, manufacturing to technology. They're trying to go from being developing to developed. So you have more growth with that. I mean, if a developed economy has 6% growth, guys, that's going to cause hyperinflation and it could probably collapse the economy. Okay? The reason being is just what I mentioned earlier is, if you have 6% growth, that much growth would mean your unemployment is probably zero. So you have everybody working, which means almost instantly you have that much more demand for all the products that you produce in the economy. You have that much more demand, more than supply of them. They can't make these things as fast as what people want them because their wages are up so high or everyone has jobs. They have crazy growth. Okay, so inflation goes up and then it can turn into hyperinflation quick. Okay, and something could trickle out of control. So you got to keep your inflation down to about 2%. Okay? So that's what I look at on the inflation front. Okay? If you look at it say in monthly, on a monthly basis like this, CPA for all items rises 0.2% in December as gasoline, shelter, medical care indexes rise. Okay, so that's the kind of number you're looking for on a monthly basis, is something like 0.2, 0.3%, maybe a little bit higher. But what you want on an annual percentage is you don't want too much more than 2%. You don't want too much less than 2%. Okay, too much less than that means we're not growing at a rapid pace. We're growing kind of slowly. Okay, and that's, obviously the markets appreciate it more when we're growing faster. That gives businesses more of an opportunity to grow and to come out with more products to sell to the market, which means their profit margins rise. Okay, I hope this is slowly starting to get pieced together for you, how I trade futures and how I teach everyone else to trade futures. Okay, and I get more in depth in this, in other vehicles like on my website. Here, I just want to show you how it's done so that you don't hop into anything that's just completely wrong, like looking at charts. Okay, I don't want to look at charts, guys. If I'm looking at the December chart, that chart back then, what that market was saying then means nothing. They weren't looking at what December's CPI was, what what the inflation levels were in December because it wasn't released yet. Okay, so if you're looking at the past, you're not looking properly. You need to see steady growth or steady decline so that you know where it's going to be in 2 weeks. That's when you make most money. Or you're looking for something like event-driven. Guys, I made $80,000 in 1 week from Brexit. Okay, and anybody can do that. Okay, so I look at the Consumer Price Index heavy. It's on the Bureau of Labor Statistics. So we'll go to the next one now because, like I said, I'm not going to dwell on these too much in this video. I'm just going to show you exactly what I look at, everything that I look at. So the next thing that I look at right after the Consumer Price Index, which is inflation, is I look at the current employment statistics, okay? And this is, again, on BLS.gov. Okay, now what this is going to show me, as you see right here, is the payrolls. So the quarterly payroll, this is the monthly payrolls. So payroll employment rises by $225,000 in January. Unemployment rate little changed at 3.6%. Okay, so this is basically non-farm payrolls. They don't include farms. This is something that you want to see. And again, as I've said previously, you can't just look at the number. You got to see, number one, what was expected by the market. If the market expected it to rise by 240,000 and it only rose by 225,000, that right there means that it was already priced into the market that the expected employment was going to rise by 240,000, which means when it shows a smaller number than that when it's released, the market's got to go down more. Okay, the market's got to go down some because they were expecting too much there, or they were off by some reason. If it's a severe drop compared to the expectations, the market could fall significantly because someone missed something or something's going on in the market. Anything can cause this, guys. Strikes can cause this to change from month to month. Many different things, weather, the Christmas season. So December, you got to watch December's. It's always iffy just because, Amazon, UPS, FedEx, they hire so many part-time workers just to cover the holiday season, right? So, that's what I look at here, but I do look at it. And you have to compare it to what it was last month, what it was the month before that. Is it staying consistent? Is it falling, or is it gaining steam? And, the reason why is, again, because of oil. Okay, so if more people keep getting jobs, that means there's going to be more demand for oil. So if I'm in oil, I'm going to take a long position in that, which means I'm going to buy into oil and I'm going to make money. Okay, so I'm going to compare this to the previous quarters. Okay, the next thing that I'm going to look at, guys, is basically I like to look at the initial jobless claims. Okay, this will show you when the next release is set to be released right here, and the time that it's set to be released. This is this is the date again. This will show you what the actuals were, and it'll show you what the previous was. Okay, this will show you what the consensus is, which means the forecast. Okay, so if it's far off from the forecast, like this right here, if the consensus was 215,000 for initial jobless claims, and it was only 202,000, okay, that's a $13,000 difference. What that means is 13,000 less people filed initial claims for unemployment than was expected. The market likes to see things like that. If it was expected there was going to be more than less initial jobless claims. This is very important, guys. This hits people suddenly and unexpectedly when you're in the market. I found that a lot. So people say, I don't know what happened. I thought the market was going good. I took a position in oil and I don't know what happened. Oh, the initial jobless claims were released. Exactly, because investors on Wall Street look at this heavy. They focus on this a lot. They want to see this a lot. Okay, this is at tradingeconomics.com is what I use. And you want to go to the United States initial jobless claims, and you will see exactly what it is in real time as it's released. Okay, and this will really help you to make the right move in the market, whether you're going to buy or sell. Okay, so so far we've looked, this is the fourth piece of data that I showed you to look at. So you want to compare all four of these pieces of data against one another and say, what is the trend with all of this data combined? Is it all moving upward? Okay, and again, you want to look at previous ones too to compare, within each data point. Okay, but then you want to compare the data points against each other and say what is the entire trade, like the entire track? Is it going to go up? Is it going to go down? Are we growing? Are we not growing? What is the trend? Is it, like nothing? Is it choppy? I don't like choppy. I don't get into choppy markets. I only get into a market if I think it's going to really rise or really fall. And that happens a lot, guys. And like right now with geopolitics, that happens in the oil markets. It's the same thing as the economy when it comes to the election, the campaign season, what certain politicians are saying, if they scare the market. So if they scare the markets too much and, that particular person ends up winning the nomination or, something like that, the markets will reflect that and they'll price that risk into the markets, which means the markets could go down. If you're good for the markets, same thing, the markets could go up. And again, you got to know how that relates to oil and gold. Anything good for the economy is bad for gold, as far as you're concerned as a speculator. Okay, so the next pieces of data we're going to look at have to do with oil itself. Okay, so this is the basic, what we've looked at so far is the basic economic indicators. Okay, and these economic indicators, basically show you what the state of the economy is going to be going forward over the next quarter, okay? And you have a high likelihood of being accurate if you read these properly and you understand how to interpret them like I do, and like people on Wall Street do. Now, as far as the oil, so I look at the weekly petroleum status report, okay? Now, like I said, I am not a day trader. People try to trade this report. That's stupid. Don't do it. I mean, anybody that has a lot of money in the markets, they don't trade this report, guys. You're either already in it or you don't get in it. Because I'm not a day trader, I don't have to be in this at 10:30 a.m. every Wednesday when it's released. That means nothing to me. I can look at it Thursday. I can look at it Friday. Okay. The reason being is that I'm not in the markets all the time. When I get in, I'm in and I stay in for about, a week, 2, a month, whatever. And so I can look at this whenever and compare it to previous ones. And again, that's what you want to do. So you want to click on this PDF button here. Okay. And it'll bring you the PDF of the previous release. And there's a summary in here. And this is all you need to look at is the summary. So if you say right here, U.S. commercial crude oil inventories, okay, increased by 3.4 million barrels from the previous week. Okay, that means there was an increase in supply. That means it wasn't used. Okay, maybe that means demand was weaker, or maybe something else happened like a weather event or some kind of geopolitical event. Either way, this is what you want to look at. And you could also look at gasoline as well. They list gasoline in here. It's in here somewhere. But you want to look at oil and gasoline, and you want to make sure that those are where you need them to be week after week. So you want to go back and look at previous summaries of the previous reports and see what happened last week to the supply of oil. Like was it sitting there? Was it building? Was there a build from that previous week as well? What happened before that? What is the trends, right? So you have to look at trends, guys. Okay. And another piece that I'm going to look at, that's what I look at here. That's on EIA.gov. Okay, and it's the weekly petroleum status report. You want to look back at the trends on that. Okay, the oil, this one right here, I look at the oil market report, guys. This is IEA.org. Okay, so this is the International Energy Agency.org. And what I want to look at on here is I want to look at the oil market report. Now, what happens here is this is January, as they release it monthly. I don't pay for this. You don't have to pay for this at all, guys. If you pay, you get it all. I don't pay. I literally just have the free report in front of me. And again, they have a summary. So this summary will tell you the state of the markets right now, of the world energy markets. And that's what you want to look at. So it'll tell you about geopolitical events that are unfolding, what to look out for going forward, what's probably going to happen over the course of the next quarter. Okay. So this is powerful as well. And I combine that with what the U.S. Energy Information Agency is saying going back a couple of months on their weekly inventory reports, and I compare all these to get an idea of where the market's going and what the economy's looking like to know if the market's going to probably have more demand or not. Okay. Now, the next pieces that I look at for data are basically for information purposes only. You want to keep up with the current events of the world and the geopolitics of the world. Now, again, on my website, and again, the link's below, but on my website, basically, what I do is for my members is, I teach them exactly about basically the geopolitical events that impact the oil and gold markets. So they learn all this. They know exactly when something happens in Iraq. They know exactly what's going to happen with the oil market, okay? They know. Okay, most people don't know that stuff, guys. Wall Street knows that stuff, but most of you probably do not. And that's what you need to know. You need to understand the biggest producers of oil in the world, and you need to understand their geopolitical risks, okay? And what could happen to their supply of oil, with those risks. So that's what I look at. So one of the major websites I look for that is called Stratfor Worldview. Okay. And Stratfor Worldview, I pay $20 a month for it. You can look at some things for free. I would highly advise, if you're going to actually be serious and get into futures with either a little bit of your money or someone else's money like I did, I would highly suggest you pay $20 a month for Stratfor Worldview. It'll show you things and, give you opinions and ideas that you otherwise might not think of. Okay, so it's good for that. If something just passes you by or you miss it, come on here, and you can read any of these. You should read all of these, okay? You want to read about Russia's oil, okay? You want to read about any of these articles, especially involving energy or the markets you want to read about. So there's a lot of them, okay? You want to read about China. You want to read about the coronavirus, guys. Why? Because China is the second largest oil consuming country in the world, and if their economy is going to be severely hurt by being shut down to contain that virus, the Middle East is going to suffer heavy too, but the global oil market is, because they won't have that much more demand for oil. Okay, so the supplies in the world will build, which means oil is going to go down instead of going up. So that's heavy risk there. So you need to look at this stuff. I would highly suggest that you would pay $20 a month for this. That's what I suggest to all the members of my website. They all do it, because it's just that important and that powerful if you're going to be in this market. The next thing I look at is actually completely free, and this is cnbc.com. And you can see here, it's basically showing you almost the same thing that you saw on Stratfor, on the first image there, okay? So these are both important, and CNBC is free, but that doesn't make any difference to me. They have good, valuable information. I only come on here because I always have. I also like these tabs up here at the top. Okay, so if I click, so obviously it's on US right now, and it's showing me why the Dow drops 250 points. Okay, they have investors work for them or release statements on their behalf, or, I forget what you call it, but, they come on there and they talk, contributors. So they have contributors that are investors. So these guys know exactly why these markets went down and what they do from day to day. And if you know why the markets did something, you start to get into the minds of investors over time. Okay, and you can kind of understand what's going to happen before it happens. Okay, so we're going to click on oil here. Oil drops 1%, post fifth straight week of declines. Okay, number one, you had the inventory build on Wednesday that I just showed you in the weekly petroleum status report. So that inventory build is not good for demand. All right, that's showing, what was it, 3.4 million barrel build. Okay, that's huge, okay, as far as oil is concerned. That's going to really make the market go down. On top of that, you have this coronavirus. China's the second largest consumer of crude oil on Earth. So if their economy keeps being shut down and people aren't working and it's just not running as effectively with taxis or transportation and infrastructure, oil is going to be severely hurt by that, okay? And we could look at gold, okay? Gold gains as virus fears outweigh strong U.S. jobs data, okay? So you understand what I'm saying here. I hope it's all been pieced together, okay? So with oil, oil's down because of this, okay? Oil's down because the markets went down because, they believe that this is really having an impact on the world financial markets, and it is. When will it stop? They don't know. Okay. And again, that's something that's called uncertainty. The markets and investors on Wall Street with all the money hate uncertainty. So oil is obviously going to drop and gold's going to go up. Okay. Because there's uncertainty. So I know exactly when to get in here. Now, if I had an idea of how long this coronavirus was going to have an impact on the market, I could either buy or sell a commodity like oil and gold, and I could wait and gain money on that gain. Okay, it's really hard to tell with something like this. Sometimes the information coming out of China, you can't depend on it. Sometimes it's just unverified or just not true. Okay, excuse me, there's a clock in the background. Sorry about that, guys. It's a cuckoo clock. But so that's what I look at as far as CNBC. I want to look at these tabs and see what's going on in the market and why. basically these, as I've explained while I was in these other tabs, before I even got to this, you know, you basically knew where oil and gold were going to be before I clicked on it. That's what I want for everybody. That's how you have to do it. This is how I interpret it, and I've always made sense of it. It's why I've never lost money in a trade. Okay, now I have one final thing that I look at. Guys, this is very important as well. This is the Wall Street Journal. Okay, my internet seems to be running a little funky again. There it is. This is the Wall Street Journal. Okay, now I pay $20 a month for this too. And again, I highly suggest you pay them $20 a month, just like Stratfor, because they have a lot of things that they drop on the markets that other people don't yet. They have a lot of breaking news that has an impact on the markets. But typically I go to say, so I'll go to business and I'll go down to energy, because remember, we do oil and gold. And I'll go down to energy down here underneath the business tab, and I'll read what's going on with everything. And guys, when I say everything, they have everything. You're not going to find this anywhere else but the Wall Street Journal. Okay, as a reason why Warren Buffett and Charlie Munger, his partner, said, you know, if you don't have the Wall Street Journal, you're not serious. You got to have the Wall Street Journal. Okay, whether that's free or whether you pay, it's irrelevant. I'd pay. 100% it's worth the $20 a month to get this kind of information, so I pay for that. So I come down here and I read as much as I can. Okay, and I look through, guys, I look for these, what is it, 7, 8, 9. So I look through these 9 places in these 9 tabs daily. It's not that much reading, guys. This is going to give me a number. Chances are yesterday I've already compared what happened in the past for GDP, so I don't got to read that much more today. Okay, so it's the same thing here. I just look and make sure nothing has changed. I don't put these on my calendar because that's too confusing and it's too much on a calendar. I'd be going off all the time. So I just keep the tabs up, or I keep them in my favorites, and I visit them every day. Now with the weekly petroleum status report, I know that this comes out at 10:30 a.m. every Wednesday. Okay, and it shows what the U.S. crude oil inventories did the previous week. Did they build or did they drop? If they drop, that's higher demand. That's good for the market outlook for oil, which means the price could go up, okay, and vice versa. And again, I look at the oil market report, so I've already looked at this summary, so you don't got to look at this every day, but, you know, it is February now, so any day now the next report will be released and they'll have a new summary, okay, and if something changes on their outlook, that'll have an effect on the markets, okay. So, you know, most of the time I look at this kind of thing right here just as confirmation of what I already know is going to happen. Okay, so it just assures me that I had the right idea already. That's why I really look at it. Okay, but if you want to look at it just to get 100% what's going to happen, you're more than welcome to. But you know, I wouldn't really use it for that. I would use it as reassurance that you're already headed in the right direction. Okay, Stratfor, I look at this the same as CNBC, just to get an idea of what's going on around the world right now. They combine geopolitics with the markets, okay? And CNBC is free. I love that, and these tabs are very powerful stuff. They'll tell you exactly why things are happening in the market on any given day, okay, or hour. Okay, now the Wall Street Journal, in-depth reporting, in-depth information. They get breaking news before anybody. Guys, I get text messages sent to my phone, and if it's an important text message, like when Yemenis rebels, who they say was Iran, bombed the Saudi oil facilities, the Wall Street Journal find out first from the Saudis that it could cut their production in half. Okay, that was on a Friday. You jump in Sunday night when the futures market reopens and you just make a killing, right? I had it first, sent to my phone in a notification alert. Okay, they don't do that unless you pay $20 a month for that. So guys, that's all I look at. That's all you got to do. This is the starting point. I hope this made a huge difference for you to understand what you need to do to hop into futures. You have to do this, guys. You know, you're not going to make money if you don't. Charts aren't nothing. You can't look at the past. All this that I'm looking at is either right now or in the future. That's how you make all the money in the oil and gold market and the commodities market and futures market, period. Okay, so if you're interested in learning more, or if you want to learn more or find out more information on becoming a member with me, I give most of my time to my members. I released this video on YouTube just to give you a great, hopefully an immaculate understanding of your starting point and where you should be. There's no other video or information like this online, guys. So you know, I hope this helps you out and you get a starting point if you're interested in doing this for your lives, okay? Because it is powerful stuff. You see what I've been able to do in just 3 years. So underneath of this video, there's a link to my website if you want to go there and find out more information or about how to become a member. You know, go ahead. You know, you'll love it, guaranteed. But if not, hopefully there might be some more videos that I release on here showing you some more free information. And if you liked what you saw in this video, please click the like and subscribe button or leave a comment below for me, and I'll answer your comments as soon as I get to them. All right, thanks guys. Have a good day.